What distinguishes Marathon Petroleum Corp? PTR regularly tracks 6,000 North American traded companies, constantly looking for new stock market winners. To find stocks meriting further analysis, PTR utilizes a large number of selection criteria. Initial criteria include adequate company size and liquidity, recent better than market stock price performance, and a high value trend rating. Additional considerations include recent company sales and earnings acceleration, favorable improvement in earnings estimates, adequate liquidity, attractive shorter-term market success, and finally, favorable performance of other members of the company's industry group. Marathon Petroleum meets these criteria very well. Our appraisal of potential stock price performance relative to its peer group and the overall stock market is based on three key drivers of value: growth, profitability, and risk. PTR identifies Marathon Petroleum as having very high profitability, above average expected growth, above average financial strength, and low stability. Profitability is a big positive influence on Marathon's valuation, while its risk profile is a big negative influence. Marathon Petroleum operates as an integrated downstream energy company primarily in the United States, operating in two segments, refining and marketing and midstream. The refining and marketing segment refines crude oil and other feedstocks at its refineries in the Gulf Coast, Mid-Continent, and West Coast regions of the United States, and purchases refined products, ethanol for resale. Its refined products include transportation fuels, such as reformulated gasolines and blend-grade gasolines, heavy fuel oil, and asphalt. This segment also manufactures aromatics, propane, propylene, and sulfur. Marathon Petroleum is traded on the New York Stock Exchange with the ticker MPC. On September 13th, Marathon closed trading at $155.48 with a market cap of $62.2 billion. At the current price of $155, what are the market's expectations regarding Marathon's future operating performance? Over the next 6 years, Marathon Petroleum shares will need to reach $261 to achieve average annual stock market performance of 9%. Upper quartile performance will require a $307 Marathon stock price by 2028. The quartile chart is an essential tool in producing PTR's valuation scorecard. For each metric included, the performance of a company in its peer group is ranked high to low, and the quartile is identified. The high end of the bar is top quartile, the bottom end is low quartile, and the line in the middle is median performance. The company's value is determined and converted to a percentile and plotted as a red dot. A company's investment profile is reflected in quartile charts. 4 categories, valuation, growth, profitability, and risk, encompass 12 investment variables. Marathon's investment profile is very sharply outlined using this analysis. A large number of characteristics stand out: low PE ratio, high forecasted profitability, low historical profitability, high stock price volatility, high expected growth, high historical growth, and high earnings variability are all extreme values relative to the market. Our conclusion is that relative to the S&P 500, Marathon has both growth and value characteristics. Its appeal is likely to be to investors neutral towards income. Marathon is of average investment quality. Marathon's peer group consists of 12 companies that have very similar investment and operating characteristics. High valuation and leading shareholder returns are 2 key measures. Current valuation levels are high relative to the Marathon peer group. Recent market returns have significantly outperformed the peer group. Relative to the S&P 500, Marathon's overall valuation is quite low. Current annual total return performance of 45% is upper quartile relative to the S&P 500 and is quite outstanding. Its current 5-year annualized total return performance of 15.9% is also upper quartile relative to the S&P 500. Marathon's achieved growth is very high. Historical growth has been very high relative to the peer group, and forecasted growth is also relatively high. Revenue growth, earnings growth have been superior. These factors have buoyed market perceptions of Marathon. Marathon's consensus growth rate forecast, which is the average of Wall Street analyst forecast, is 39%. substantially above the average of the historical growth measures. PTR's growth rate forecast of 18% is substantially below this consensus number, but is still substantially above the average of the historical growth measures. Profitability has been Marathon Petroleum's biggest valuation strength. Its return on equity, pre-tax margin, and pre-tax return on assets are group leading. These factors have strengthened market perceptions of the company. The company has very low cash, however, and will have to work hard to generate attractive investments and improve its valuation further. Return on equity, our forecast is 18.5%, so significantly below our recent forecast. A modest erratic decline occurred between 2014 and 2022. Our current forecast, however, is significantly above the 2021 low of 4%. Marathon Petroleum's risk profile is unfavorable. Overall variability has been very high, with very high revenue variability, very high earnings variability, and above average stock price volatility. The company's financial strength, on the other hand, is relatively high, and earnings expectations at the moment are also relatively very high. The debt to capital ratio has been relatively steady. Relative to the Marathon Petroleum peer group, the company's wealth creation profile is very favorable. The profile is based on measures of warranted value, appreciation potential, and total shareholder returns. The change in warranted market value for Marathon has been relatively high. Its appreciation score currently is relatively high. As mentioned earlier, its 1-year total return has been relatively very high, and a 5-year annualized total return is also relatively very high. Total shareholder returns for Marathon are expected to significantly beat the overall equity market. Based on current investor expectations, Marathon Petroleum shares should reach a level of $679 by 2028, a 29.5% per year total shareholder return. A 2028 stock price of $261 would reflect median performance, and a price of $307 would be required to reach upper quartile performance. PTR's value trend rating is the overall measure of a stock's attractiveness relative to a universe of all companies traded on North American exchanges. The value trend rating combines the appreciation score, which measures a stock's appreciation potential relative to the universe, 0 being the lowest, 100 the highest, and the power rating, which measures its current timeliness, again 0 being the lowest, 100 the highest. High value trend rating stocks are expected to outperform the general market, while low value trend ratings are expected to lag. Marathon Petroleum has a current value trend rating of A, which is our highest rating. The company has a good appreciation score of 80 and a good power rating of 83, triggering the highest value trend rating. The value trend rating identifies groups of companies at stages when individual company performance is reflecting a significant change. As a consequence, a given value trend rating can persist for relatively long periods of time. It's important, however, that ratings be regularly reviewed for specific stocks of interest. Marathon Petroleum's rating history has been variable. Over the last 41 months, A or B rated has been the highest rating category at about half of the months. Well, that's it for Marathon Petroleum's valuation scorecard. You can find additional company research and current value trend ratings on our website at pricetargetresearch.com and more videos on youtube.com/pricetargetresearch.